Hello everyone, Larry Lavrancic for Ichimoku.co and ForexTrading.tv with a daily analysis for the Euro US Dollar FX for trading day ending Tuesday, December 10th, 2013. Well, a continuation of the trend to the upside today, a candle that's made a higher high and a higher low. Another small body candle suggesting a possibility of a change of trend. But the significant thing here is the large shadow on the top of this candle, and this does suggest that the buyers have lost commitment as they tested up around the 138 level. And it certainly is quite a different candle in characteristics to the previous three bullish candles that we saw. For each of those candles we saw the buyers closing with control, and today we've seen the buyers lose that control. We've seen neither side actually take control because the market has closed around the midpoint level, suggesting that neither the buyers nor the sellers have taken control. And if we saw the market closing down around the low, then the sellers would have been in control. So the story here is about the lack of strength from the buyers and the loss of commitment that they saw up around the 138 level. Now, if we look at this trading around this 138.32 to 138 level, these 1, 2, 3, 4 candles around this area have tested either just above or to the 138 level and have been rejected from there. And the last time that we were trading up there, we saw this very strong rejection, and obviously that area now is having its influence. It is a very important zone of resistance extending from 138 up to 138.32 around that swing high. So we may see a change of trend here based on the rejection that we saw from that level. Now, the area at 137.11 is a previous area of resistance, and here we've seen the buyers coming down below there for the candle prior to today's trading. And there's a possibility that if this market does come off, we could see that hold as support, so we may see buying come in if the market does come off and if the sellers do attempt to take control of this market. Now, the Fibonacci retracement technique is giving us some interesting information here, and we have seen a very strong first time frame uptrend that this market's been in for some time. And as the trend has been developing substantially to the upside, we've seen the size of the bodies decreasing, and importantly for today's trading, we've now seen the market interacting with the 261.8% level at the 137.81 area, and we've seen price action being rejected from there. So that may be significant and may suggest a very real possibility of a change of trend. Combined with the buyers losing commitment, as we saw for these three candles closing up towards the highs, and now the buyers losing commitment, losing control, that possibility of a change of trend is quite real, and we should be looking for a potential lower high and lower low. But in terms of Ichimoku, this market is still looking very strong in all three time frames. We are trading above the cloud. We had the bullish breakout up above the cloud, so we have a bullish market in the long-term time frame. We're trading above the Kijun-sen, so bullish in the medium-term time frame, and above the Tenkan-sen, bullish in the short-term time frame. That Tenkan-sen is pointing up quite sharply, as is the Kijun-sen. We have to ignore that last bit because that's reflecting a candle that hasn't finished trading yet. But this sharp upturn in the Ichimoku indicators reflects this very strong upside momentum in this market, and it does suggest that if this market does come off, we're likely to find support either at this 137.11 area or even at the 136.45 area, and we're likely to see the buyers come back into this market. But really the important thing here to look at is if the market does appreciate for today's trading, the important thing to watch is how we react to the 138 to 138.32 level. If we see early bullish activity up above 138, we may see the market test to 138.32 and even perhaps above. But if we see a strong bearish activity, we may see that change of trend, and the low of the current candle becomes important, which is at 137.31, for a potential test down to the 137.11 area for the market to potentially find support down around that level.